Good morning and welcome to our KraneShares webcast this morning. My name is Henry Greene and I'm a senior investment strategist at KraneShares Exchange Traded Funds. It's my pleasure to welcome you this morning to an exciting webcast and discussion. We will be discussing Vietnam's emerging market upgrade and key equity market drivers for Asia's latest dragon, which is Vietnam. I'm joined today by Tung, who is a chief economist at Dragon Capital, our partners on the Vietnam Growth ETF, ticker KPHO. And if we move to the next slide, we'll have a quick introduction to KraneShares and our partnership with Dragon Capital. So KraneShares Exchange Traded Funds began about just over 10 years ago when Jonathan Crane returned from China after starting and selling a successful media and entertainment business in the early 2000s. And what he realized when he came back to the United States was investors didn't have a great way of accessing indexes on Chinese equities. And he sought to make it easier for investors in the United States and globally to access China's markets. And since then, we have grown and evolved into a broader ETF platform covering China, not only China, but also other emerging markets regions, as well as emerging technology trends, income strategies, and alternatives as a full-service ETF provider and financial institution. And it's really special, our partnership with Dragon Capital, and it's my pleasure to be here with Tung to give you guys, our audience, the first look through into our new ETF, as well as the exciting opportunities in Vietnam. Here on the right, we have our team, part of our team, and Dragon Capital came to visit us in New York. We actually had our ETF up on a billboard in Times Square, which was very fun. And if we go on the next slide, we just have a quick overview of KraneShares products. So as I mentioned, we've expanded beyond K-Web, which is China Internet, which is probably what many of you may know us for already. Expanded quite significantly, and this is our latest expansion into a new, soon-to-be new emerging market, up from a frontier market of Vietnam with the launch of KPHO, named after, of course, the very famous soup that is traditional in Vietnamese cuisine and very much enjoyed here in the United States. So let's move to slide 4, where we just have a quick introduction. So yeah, KPHO, the ETF, just launched in December. And we are really excited about this product. We think that it combines Dragon Capital's expertise as well as has a key differentiator in that it actually owns stocks that are otherwise currently limited to foreign investors. So Tung will talk more about that as the discussion continues. And so Vietnam, I mean, I guess Tung will have a lot to say on this topic, but why Vietnam? Many people know Vietnam recently for becoming a supply chain diversifier for companies' China Plus One strategies. And we've seen its exports really surge, partly due to this. But it's really a lot more than that. This economy has just so many attributes to it right now that we find are similar to what we saw, what our founder, Jonathan Crane, saw in China in the early 2000s, and so that's really exciting. So I think Tung, if we move to the next slide, I'll have Tung introduce himself as well as Dragon Capital. Tung.
Thank you, Henry. Let me just start by saying how excited we are and honored we are to act as the supervisor to the KPHO ETF. We feel very much privileged to work alongside our highly professional partner, KraneShares, to bring investor asset to Vietnam, a market that we believe is among the most exciting and perhaps the fastest growing in the years ahead, right? So before diving into Vietnam itself, allow me to briefly introduce who I am and who we are. So my name is Tung Dang, as Henry already mentioned. I'm chief economist at Dragon Capital, right? And Dragon Capital is the oldest and the largest fund manager in Vietnam. We began our journey more than 30 years ago in 1994. And if you remember, that was just shortly after the US lifted its embargo on Vietnam. And at that time, we started with a small team of just 6 people and approximately 18 million US dollar asset under management. Our founder founded our firm with a clear and long-term vision, which is to really support Vietnam's economic progress by connecting global investors seeking attractive returns with Vietnamese companies who are looking for capital to grow. And in parallel in doing so, we have been actively involved in helping to also build a transparent, well-functioning and sustainable financial market in Vietnam. So fast forward to today, Dragon Capital currently is managing over 5 billion US dollar across both onshore and offshore strategies and spanning equities as well as fixed income. And this growth has been driven by a strong team of around 200 professionals, the majority of whom are actually Vietnamese, including our newly appointed CEO. So in short, Dragon Capital is really deeply rooted in Vietnam, and we take pride in our local knowledge, long operating history, and our ability to bring the best of Vietnam's investment opportunities to a global investor. And so with that background, let me walk you through some of the key developments in Vietnam, and perhaps explain. Yes, Henry, you want to say something?
Thank you, Tung. Yes, just very quickly, as we get started here, I just want to let our audience know that if you have questions, we will take your questions in a lively Q&A session will be held at the end of the webcast. And you can, if you're joining us on Zoom, you can press the question chat function to ask a question. And if you're joining us on our website, please email info@KraneShares.com at any time during the webinar, and we'll take your questions at the end. Tung, please go ahead.
Thank you, Henry. So yeah, as I mentioned, I will walk you through some of the key developments in Vietnam and explain why this is a market that, in our view, deserves a strategic allocation in your portfolios. And I will focus on 3 core pillars. First one, structural reforms. Then we will move on to economic transformation and demographics. So on structural reforms, as Henry mentioned, Vietnam's growth story really began with the reforms in the late 90s, which we call Đổi mới, which is the Vietnamese word for renewal, right? Which marked the country transition towards a market-oriented economy. And since then, reforms have been consistent and pragmatic, aimed at improving productivity, encouraging private enterprises, and integrating Vietnam into the global economy. And so as a result, as you can see on the chart here, Vietnam has delivered one of the most sustained growth trajectory in Asia over the past 3 decades. GDP per capita has more than doubled, reflecting, in my personal view, not only a cyclical growth, but also a deep structural improvement in living standards. And Vietnam today, in contrast to quite some beliefs that we have seen, is no longer an agricultural-driven economy, right? You can see that urbanization now accelerated towards almost 50%. And not showing on this slide, but just to share with you, agriculture now contributes just over 10%, slightly over 10% of the GDP, down sharply from the 45% that we saw in the late 80s, sorry. And instead, you can see from the combination of manufacturing and services accounting for the bulk of the GDP of the economy, almost 80%. And I think this shift is important from an investment point of view because it expands the opportunity set now across consumer, financial services, industrial technology, and also infrastructure sectors as well. And also, as you can have seen from recent developments in Vietnam, this transformation has also been reinforced by Vietnam's role in the global supply chains as well, particularly in electronics, with Samsung having their biggest hub in Vietnam, manufacturing and export where the country has becoming more and more important in Asia. If you can move on to the next slide. So an important driver for Vietnam economy is demographic and human capital. Vietnam has been benefiting from a relatively young and growing workforce. As you can see on this slide, for Vietnam, the median age of the working force is below 35 compared to almost 40 in China and Thailand, and 45 or even 50 in Japan, 45 in Korea and 50 in Japan. So this demographic profile supports really long-term consumption growth, labor supply, and also productivity gains as well. And if I can also go on to the next slide, to say that just as importantly, also in contrast to some of the beliefs out there as well, the workforce in Vietnam is increasingly skilled and digitally connected. So you can see that literacy rates in Vietnam are in line with the regional peers, and we have higher internet penetration in Vietnam compared to the Asian Pacific average as well, which has enabled rapid adoption of technology, digital services, and financial innovation, which we touched on in the latest slide. But just on this point, one example that I would like to highlight, and I think mentioned it to Henry when I visit the KraneShares in the US, right? Is the interesting fact that Vietnam consistently positioned as one of the top countries globally for cryptocurrency adoption. So Vietnam, right? Not any other country, but Vietnam, frequently ranking in the top 5 worldwide. So obviously, crypto itself is not the investment focus here, but that example illustrates how quickly Vietnam consumers and businesses adopt new technologies and also financial tools as well, right? So putting all this together, Vietnam combination of reforms, structural transformations, and favorable demographics, in my personal view, creates a strong foundation for sustained growth, right? And from an investor perspective, perhaps these are the conditions that would support rising corporate earnings, deeper capital markets, and expanding investment opportunities over time. And with that, allow me to show you some of the results that we have achieved in 2025 and what should we be looking forward into the futures, right? So in the next slide, to sum up the achievement that we have had in 2025, Vietnam economy closed 2025 on a very strong note. So we set out to achieve 8% GDP growth for 2025, and despite the many challenges during the year, from reciprocal tariff and also on the weather condition that we had at the end of the year, we managed to get 8.02% GDP growth for the full year. And this is the second highest outcome in more than a decade, surpassed only by the post-pandemic rebound in 2022. Now, this performance was underpinned by an acceleration in momentum as we as we progress to the year, with Q4 GDP at almost 8.5%, a very strong number, the strongest fourth quarter expansion actually in 15 years. Now, on a nominal term, we now exceed $5,000 GDP per capita, and for the first time, our nominal GDP is well above $500 billion for the entire economy, right? So I mentioned about the growth at 8.02% on the headline level, but what I want to emphasize here is that this growth is very much broad-based. So we saw manufacturing led the way. We saw domestic consumption picking up pace, especially in services, with international tourism hitting a record high of 21 million visitors for 2025. And on the external side, I think it's very encouraging to see that even the external trade, which faced a lot of challenge from the reciprocal tariff in April, hit a new record high this year, 930 billion, and both export and imports growing at double digit, right? On the investment side as well, we saw record public investment disbursement, but also from the foreign investor perspective, we saw FDI disbursement also hitting a 5-year record high as well, right? Now, crucially, I think what matters here is that all of these amazing story about growth are not compromising any stabilities. So inflation remained at 3.3%, which is well below the target set by the government at 4.5%, right? And unemployment for Vietnam has continued to stay low and stable at 2.2%, right? So overall, I think 2025 has been a really successful year for Vietnam. It was a result of the reform. So we had the Đổi mới reform, the renewal version 1, right? And in 2025, earlier 2025, we started our version number 2, which came with a number of reforms. Firstly, we put the private sector to be not only an important driver, but the most important driver of the economy. And in order to do so, we unlock a number of challenges, obstacles in the past for private sector. We reduced the bureaucracy. In just 6 months, Vietnam reduced the number of provinces from 63 to 34. And also the number of ministry from 18 to 11. I think that's unprecedented on many level, on different scale, right? Even corporation, if they want to do that, I think that would take perhaps even longer. So that is a demonstration of the intentions of the government to really push the economy to the next phase of expansions. And earlier this year, I think just last week, we got another important resolution to basically try to improve the efficiencies of the state-owned enterprises. So as you perhaps know, SOE or public sector, they tend to do things that private sector, do not do, right? Just to complete the whole economic pictures. But what this resolution is trying to do is to say that in addition to obviously do what you have done in the past, you are going to lead in terms of innovation. You are going to lead in terms of creating that new frontier for the economy to grow. And we believe that will improve the efficiencies of the public resources in the future as well. So now talking to the futures, allow me to show you some of the key themes that we think will play out in the next few years in the next 2 slides, or maybe the next slide first. Right, so future growth of Vietnam, we believe that will hang on 3 main pillars. There will be urbanization on the left and digitalization in middle and infrastructure on the right side, right? I want to talk about this digitalization here first, because traditionally for an economy to grow, we go through step or go through the staircases, we walk up the staircases. In this case, I would argue that Vietnam is leapfrogging, meaning we are jumping a few steps ahead by adopting more digitalization in the economy. So I will talk more in the next slide, but one example that I really, really like here. So I came from, I was in Vietnam, I was born and raised in Vietnam, but then I went overseas to study and stay in Singapore for more than 10 years. And Singapore tends to be sample or given as an example of how an economy is so developed, right? And I can tell you that the payment system there, when we heard of QR payment, that was a game changer in Singapore. I came back to Vietnam, and that was already 1 to 2 years already. So if you go to Vietnam nowadays, one thing that perhaps Henry you can say whether or not you have seen the same thing, but if you go to Vietnam, the amazing thing is that you actually don't see a lot of people having cash. They don't use cash to transact in the economy. They use their mobile phone. They scan the QR and immediately they can pay. And even the smallest thing like buying fruits or vegetable, you are going to do that, right? So that is changing the game in Vietnam. So we are skipping a few steps in order to accelerate the economy, right? Or the other example that on this slide that you can see here is that in the past, we used to go to the local market. And the next step normally is that people go to the big box retailer, you go to the shopping malls, right? So now, yes, people still go to shopping malls, but they do that in order to try out stuff or buy perhaps very ultra luxury items, right? That have more credibility being in the shopping malls. For most of the other stuff, we do shopping on e-commerce platform. So if you go to Vietnam and you ask anyone about Shopee, everyone knows about Shopee. You ask them about TikTok shop, you ask them about other online e-commerce platform, they would know, right? And a lot of transactions are happening through those kind of platforms, and that accelerate the economy, right? So that makes the economy more efficient instead of going slowly through the legacy system, right? So on urbanization, I think I mentioned that already in an earlier slide, that urbanization is a big theme in Vietnam. We are going towards the 50%, and we are perhaps moving even further than just the 50%. Now, the expansions of the urban middle class, in my opinion, is a very powerful demand driver, right? Because urban consumers tend to spend more on housing, financial services, healthcare, perhaps education and discretionary consumption as well, right? So all of those will translate into a broader opportunity sets for investors as you look into Vietnam. So the last thing that I want to mention here is infrastructure. So for tourists, for those of you who have been in Vietnam previously, right? Perhaps you would share a fair shares of frustration with moving around, right? Not only from one city to the other, but even within the city. Traffic is horrible, right? I think I'll be the first one to admit that. And we know that because if you look at the statistic, logistic cost in Vietnam is huge. It's 18% of GDP at the moment, where our peers are in lowest double digit or even single digit, right? And so we think that for the economy to progress further, to progress faster, there has to be some change with infrastructure, right? And the good news is that the new government is putting a lot of effort in building out the infrastructure for Vietnam. And the infrastructure for Vietnam, the interesting thing here is that it's not only constructed or being handled by the public sector, but the private sector is being very proactive in helping the government to do so as well. One example that I can give you is that we are talking about the North-South high-speed railway, and Vietnam has the advantage of adopting high-speed railway because we are just one long country from the north to the south, right? Unlike, for example, like China, where you have to build many lines just to circle around the country. So the high-speed railway, you can think of it like the Shinkansen in Japan, or the Beijing-Shanghai high-speed railway in China, or the high-speed railway in Europe. And I personally think that will change the game for Vietnam. That will change how we grow out in terms of connectivities, reduce costs for business, and support the expanding domestic consumptions. So I think these three drivers are working together, right? They're not in isolation for sure. And we keep coming back to reforms and renewal as well, because the intention from the government, in my personal view, it's just so important that they don't just talk, they don't just come out with resolution which sort of like generic kind of like statement, but very specific goals for private sector, for SOE to achieve by 2030 and beyond, right? And so with that, I think Henry, the next thing is really for how global investors are recognizing this progress, right? And so perhaps you can talk about the market updates and upgrades and capital flows.
Yeah, absolutely, Tung. Thank you so much. That was really great kind of overview of Vietnam's economy. And I'd also like to point out that on the high-speed rail front, I think it's very telling that the government is seeing this as being led by the private sector, right? And I think that setting a very positive tone for business people and for the global investment community when they look into Vietnam. So in October, index provider FTSE Russell announced that they would be upgrading, so quote upgrading Vietnam from, it was in their frontier markets index, the FTSE or FTSE Frontier Index, and they upgraded it to secondary market status. So this will take effect, meaning that it'll actually move from the Frontier Index to the Emerging Markets Index in September of this year. assuming everything goes as planned. And now, so we've been looking very closely at indexes for a long time. We worked closely with MSCI as they included more China A shares or locally listed stocks into their indexes. And so looking ahead at Vietnam, we see this as kind of the next inclusion story, if you will. And it's a very powerful catalyst for investors. And that's for two reasons. Number one, it is a sort of affirmation for Vietnam, for the regulators, for everyone involved in Vietnam's capital markets, that these capital markets have developed to a global standard. And so that involves many, many different factors. We could go into detail on this. We just don't have time today. But primarily being, the ability for international brokers to have access to these companies, to these stocks and bonds, to provide execution service for their global clients, as well as settlement cycles that align with the rest of the world, among other key reforms. And these capital market reforms were part of, I think, are the latest development in this sort of renewal, doi moi, opening up, I probably butchered that, but process in Vietnam. And so that's really exciting. And what's even more exciting for us as an investor and as a fiduciary to our clients is when we look at, okay, how is this going to impact capital flows into Vietnam? So index inclusion, and again, it's not that it wasn't included in these index providers. It was in their frontier markets index. But for both, the emerging markets index is just tracked by a great deal more capital. So for FTSE, it's $2 billion, and for MSCI, it's almost, or excuse me, it's $200 billion tracking the FTSE Emerging Markets Index, and for MSCI, it's over $1 trillion tracking that emerging markets index. Okay, and that's an estimate because that includes both passively tracked assets and as well as anticipated active assets that would move into Vietnam. Given that it's benchmarked to an MSCI or an FTSE index family. And so inclusion could lead, based on our estimates as well as Dragon Capital's, to $2.5 to $7.5 billion in active flow beforehand, and then 500 to $1 billion in passive flow after inclusion takes effect, and passive managers are then really compelled to allocate to Vietnam. And then, so that's the immediate impact, right? But over the long term, so looking into 2030, the estimate is, and this is also coming from the World Bank, could lead to $25 billion of inflow into Vietnam's equity market. Okay, so that's really significant because that represents, as of today's levels, 8% of the market capitalization in Vietnam today. So that's a really significant inflow. It has the potential to support equity prices, the potential to support foreign investor participation in the market. And so we really see this as being very structurally beneficial, and an important step, an important milestone for Vietnam's capital markets. And that's why we think today, looking at as we are about 9 months before inclusion takes effect, we think it is very important for global investors to either allocate or develop a strategy around Vietnam. And then if we move to the next slide, so some relatively recent examples of upgraded markets, if investors would like to look at them. Obviously, these are different countries, so we're looking Middle East, Gulf region, Saudi Arabia and Kuwait were upgraded by both FTSE and MSCI from 2018 to 2020. And so those are the most recent examples of significant upgrades of a market. So if there's any interest in looking at, well, okay, how does this really impact capital markets and performance, those would be two very good markets to look at, right? And we see stock market foreign ownership in those nations at 13 and 15% today. And so I would suspect, though, that Vietnam could go even higher. This is purely speculative than in these markets, just because it's a much larger country. It has a more diversified economy than Saudi Arabia and Kuwait, as well as there is more the international capital that could come in. It just trumps the capital that's already there. And then if we move to the next slide, we're going to come to another topic that I think is important, not only for Vietnam's understanding of Vietnam's capital markets in general, but also for our product specifically, so that's KPHO, and that's foreign ownership limits. Now, for those of you who are familiar with emerging markets, familiar with frontier markets especially, right, you've heard of foreign ownership restrictions, right? We know them from China, where certain industries, certain sectors were protected in some cases entirely from foreign investment to just to preserve kind of local national control over those industries for a variety of reasons. Now, in Vietnam, it's a little bit different. And in fact, it's very different from China, where technically speaking, any business that sets up in Vietnam, and it's in any sector apart from banking, can go as far as 100% foreign ownership if they like. The problem is they receive a great deal more red tape, and it becomes harder and harder for them to set up new brick and mortar locations, to get certain permits, et cetera, et cetera. So it's kind of an interesting regulation that Vietnam has that is somewhat unique, I think, to Vietnam. And so what happens is a lot of the best companies, a lot of the companies that are innovating, are moving quickly, are growing, are powering this growth, this, again, trade growth, right, which is coming from the China Plus One, but also the consumer growth, right, that we see, right? And so a lot of these companies were have decided to keep their foreign ownerships lower, to below the 50% benchmark, before you become labeled as a foreign-owned, a wholly foreign-owned entity. And so that has created some difficulties for foreign investors to access these companies. Now, after these companies very quickly, after having proven themselves to be, of quality, right, that they very quickly reached that 49% threshold, okay? And so today, fast forward to today, where you've seen Vietnam's equity market perform very well in 2025, and a lot of foreign interest coming in. A lot of these companies, you just can't get them unless you're on the ground. So we came up with, in partnership with Dragon Capital, we have a sort of solution for this, which is very impactful, and that is Dragon Capital has an ETF, a locally listed ETF, that we are buying in KPHO, and that ETF itself is invested in exclusively the companies that are currently restricted to foreign investors. So our ETF holds that ETF, as well as a basket of stocks determined by the methodology, which we'll get into in a moment. And so why is that important, right? Well, if you look at the chart on the right, you actually see that the Vietnam Diamond Index, so that's the index that Dragon created to identify these companies with foreign restrictions, has significantly outperformed other broad market index, such as the Market Vector Vietnam Local Index, which is quite popular, and quite significantly 108% since May of 2020, which was around the inception of the Diamond ETF and the Diamond Index. And so, we think that these are really, really high quality companies in Vietnam that we wanted to include, and we worked with Dragon Capital to make sure that our clients in the KPHO ETF are able to access these companies. And we're proud to say we are the only U.S. listed fund to employ a strategy specifically owning the Diamond ETF, and we're very proud of that. And if we move on to the next slide, please. So getting in a little bit to the methodology here, right? So KPHO employs a fundamental look-through, fundamental screen of Vietnamese companies. And again, that's looking at the companies outside of the Diamond ETF that we hold, right? So we use a very rigorous fundamental screen developed by Dragon Capital, and that has resulted in today currently a lower, significantly lower average PE ratio, forward PE ratio as well, versus even some other Vietnam indexes, and also MSCI emerging markets, and of course S&P 500, which we see continuing, of course, as I'm sure many of you know, to hit new highs, right? Vietnam itself is undervalued relative to both broad emerging markets and the U.S. And then the companies in KPHO, with that fundamental screen we employ, are on average have an even lower valuation. So that's just really where we're seeing KPHO differentiate itself, as well as why we think that there's a great opportunity for some multiple expansion in Vietnam as markets recognize both the development of the capital markets, also that 8% growth in 2025, just headline GDP growth that Tung mentioned, which is one of, if not the highest. I don't know if all the numbers are in yet, but looking to be the highest in the Asia region in 2025. And continuing strong growth in 2026. And so on the next slide, we just have a quick flow chart of describing this methodology and screening process, right? So it starts with a broad universe of stocks listed on Ho Chi Minh Stock Exchange, and then without trading restrictions, there's a certain period in which they have been listed. And then there's another screen for free flow market cap and turnover, must be at least $1 trillion, $38 million or greater, with turnover requirements. And then, of course, the fundamental ratios, right? There are a few of them, one of which is forward price to earnings, must be actually less than 30. And as you'll see on the next slide, that's quite unique. And then again, as I mentioned, a lot of KPHO is comprised of the Diamond ETF, maximum weight 24%, so about a quarter, and then 75% are stocks picked by the screening seen above. And then if we move to the next slide, please, just want to give, so one of the things that I've seen being discussed a lot recently in financial media around Vietnam is the Vin Group. The Vin Group is a large conglomerate based in Vietnam, and they have a lot of. There's the Vin Group itself, and Tung, I might ask you to help me out here, but there's the Vin Group itself, and then they have some offshoot companies such as VinFast Electric Vehicles and Vin Homes, which is real estate. And just because of KPHO's methodology, right, in an attempt to avoid those overvalued stocks, we don't hold Vin Group, but we do hold Vin Homes. Now, Vin Group surged in performance in 2025. You see it's up 655% since the end of 24. And by some accounts, Tung, and I don't know if this is true, but I read an article saying that Vin Group and one of its offshoot companies alone accounted for 3/4 of the return in the Ho Chi Minh Stock Index. So we have some investors worried about this concentration risk in Vietnam, and we think KPHO's methodology is a way to avoid that. Tung, I don't know if you have any thoughts about maybe how.
Yeah. No, yeah, absolutely right, Henry. I think the way that we screen out the companies to maximize the valuation, right? So to avoid any company that has grown too fast and has an sort of extreme valuation like Bean Group, um, and at the same time allow for us to look at companies that have decent valuation and potential for growth. So as Henry mentioned, Bean Group is a conglomerate and they own or they have shares, majority shares in a number of companies. Vinhome is one of them. So when we look at the Bean ecosystem, so on the Vietnam Stock Exchange, you have Bean Group, you have Bean Homes, you have Vincom Retail, which is a company that operates shopping mall, and then you have Bean Pearl, which owns and operates the hotels and amusement parks, right? So you're right, Henry. They alone account those four companies, right? They account for the bulk of the return on the Vietnam Stock Exchange in 2025. But if you strip out Vingroup, which obviously has a very high PE valuation as of now, you look at the other company like Vinhome, they still have decent valuations. They have tremendous pipeline projects. For example, right now we're looking at project in the southern part of Vietnam, 2,800 hectare in terms of land, and the bulk of that land is going to be reclamation from the sea. Very beautiful projects that is going to be one of the hot topics for the years ahead, right? And
Yeah.
in addition, they also have other projects in the middle part and the northern part of Vietnam as well. So tremendous growth, and
Yeah.
that company will fit very nicely in the screening of the KPHO methodology.
Yeah. Okay. Thank you, Tung. So just going to go very quickly through the next few slides. So we have quite a few questions coming in, which is great. So on the next slide, we're just looking at KPHO's current sector breakdown. And so we see a 55% weight to financials, which, given that this is a growth strategy, you might not expect to see. But again, we need to remember that Vietnam is a frontier market, just getting upgraded to emerging market by index providers. And a lot of countries at this stage in their development, China was here, right? It's just, that's the reality in the capital markets. It's about 50% financials, and that's just the reality you see. The advantage of KPHO, though, is given its methodology. So if we move on to the next slide, given KPHO's methodology, it could be very uniquely able to take advantage of what we see and what Dragon sees as a very robust IPO pipeline of companies that are very exciting, specifically because especially those in the consumer and technology sectors. So we could see these sectors really, really increasing in their representation in KPHO. And then eventually as well in the broader equity market and in the broad benchmarks. But given our methodology, we're uniquely positioned to see that increase much faster in our belief. And I'll just quick note on in IT and tech services. So V&G Group, I actually visited there when I was in Vietnam in September. I visited their corporate campus in Ho Chi Minh City, and I was very, very impressed with the quality of their campus, and it really had it felt like I was in Silicon Valley office, which is really exciting. And a lot of people don't know this, that Vietnam has this vibrant technology sector. I also visited with FPT Group, which is a IT services company operating globally. They're already listed. And so there's just this technology ecosystem that exists in Vietnam that I don't think gets enough attention. And so if we just go to the next slide, these are just the top holdings in our KPHO ETF. And again, this is including a look through to the Diamond ETF, which is held by KPHO. And as you see, within the top 10, there are 3 stocks that have reached their foreign ownership limits. So these 3 stocks in the top 10, there are more, are coming from the Diamond ETF, and you can really only get them as a foreign investor through KPHO. Okay, so let's move on to our questions because we've had quite a few. So Tung, you ready? They're not going easy on us, all right? We got a few questions here. Okay.
I'm
So
glad we have questions because yeah, that shows interest, right?
yeah, exactly. So one of our first questions is whether the Vietnamese stock market is mostly institutionally driven or retail driven, and what kind of the investor profile looks like, whether it's long term or short term. And Tung, any thoughts on that?
Yeah, so I think this is a very valid question because at the moment, if you look at the transaction data for the Vietnam Stock Exchange, it is absolutely correct that retail participation is still the bigger chunk, right? But the presence of institutional investor like Dragon Capital or some of the other funds in Vietnam is become more and more increasingly important, especially with the FTSE upgrade that you mentioned earlier, Henry. We are also on our way to set up what we call the international financial centers in Vietnam. So there will be one in Ho Chi Minh City and there will be another in Da Nang, which is the middle part of Vietnam. And the idea here from the government is to ensure that the financial market or the capital markets are going to be well balanced between the participation from the retail investor and also institutional investor as well. So right now, retail is still driving the bulk of the transactions that we are seeing on a daily basis. Having said that, the presence of the institutional investors are become more and more important. And you can see that from the fact that the index is become less and less volatile as well. Because if you would expect that retail participation is the bulk, you typically would see up and down the market on a daily basis, right? But we have had not so many volatilities over the past, I would say, 24 months. Right now, people are becoming more and more, I would say, less short term. And the reason is now people are more acquainted with the idea that we have a plan for the economy for the next 5 years, right? So sort of like you are at point A and you know roughly where point B should be at the end of 5 year, right? So they can afford to ignore or avoid the noises in between and hold on to the position a little bit longer. So that's our observation.
Okay, great. Thank you, Tung. And so our next question is from Thomas. So thank you, Thomas. And it's about tariffs, and it's about actually an upside for some countries, which is if the U.S. were to completely remove tariffs from China and others, asking about how that would impact Vietnam, assuming that Vietnam has benefited from supply chain movements from tariff countries to Vietnam for their supply chain. And Tung, I'll let you comment on it, but I just want to say, in response to that, I think that it's important to think about trade, especially when it comes to Vietnam, in a holistic way, outside of just whether or not there are tariffs and what countries those tariffs are applied to. Tariffs or no, Vietnam benefits quite significantly from being a non-aligned nation, just in the sense that they obviously they share a border with China. They are also heavily engaged with the United States, and they are in this sort of middleman role, similar to Singapore, in my opinion. In my opinion, this will continue to pay dividends and support trade with Vietnam, regardless of whether or not there are tariffs. I think more and more firms will be taking geopolitical concerns into account, and Vietnam will look like a viable option. Obviously, Singapore benefits from this in terms of services and capital markets, but does not have a manufacturing base. So Vietnam is very interesting and very unique being having this sort of neutral status while also having a very robust manufacturing base. I don't know, Tung, if you have any thoughts on this as well.
Yeah, no, Henry, I think you really touched on one of the points, one of the key points that I was about to say, is the fact that the stability of Vietnam, right? So if we take a step back and look back in April 2025, and when the reciprocal tariff was announced, right? So for Vietnam, to be fair, that was a shock when we saw the 46%, right? But what happened in the next, I would say, 2 to 3 weeks, over 2 to 3 months, was very encouraging. Is that the Vietnamese government was very proactive, right? We were, if I'm not mistaken, we were perhaps one of the first ones to engage the US to talk about tariff, right, negotiations, how we can work on the tariff so that we can reduce, and we did reduce the tariff to 20% at the end. Now, interestingly, when we spoke to some of the investor or some of the manufacturers, overseas manufacturers that have been industrial parks in Vietnam, they took comfort in the fact that the government was very proactive because they had been burned from all the geopolitical risk in between US and China. And personally, if you ask me, I think that is not going to go away anytime soon, just because of the power struggle between US and China, right? And so the fact that the Vietnamese government was very proactive gave them comfort to say that stability is going to be here. Now, when you look at the average tariff and you say that 20% in Vietnam, 19%, from our peers, neighborhood in the region, the business owners, to them, that 1% is nothing when they think about stability. The other thing that they think about Vietnam is the familiarity or similarity with China. So obviously, a lot of these companies have been or were in China previously, and they were used to the cultural aspect, the operational aspect of China. And to them, Vietnam is not so much different. It's definitely different, but it's not so much different that they can get used to. So in summary, firstly, I don't think that removal of tariff from China is going to happen bilaterally. If anything, that is going to be happening on a global scale. And secondly, I think whatever is going to happen, the evidence that the Vietnamese government was very proactive in dealing with the US government on reciprocal tariff gave business owner a lot of comfort to look over any short-term changes, or to say that, over the long term, I want to be in Vietnam, especially with relatively highly skilled labor force that we have in Vietnam as well.
Great, thanks, Tung. So we're going to move on to our next question, which is about risks. And specifically, it's about skills risks in terms of the workforce, and also about the regulatory environment. We have a great deal of experience in working with clients on understanding how regulations work in China, and Vietnam is a different story, right? And so I think, Tung, would you speak a little bit about risks from changes in government policy potentially down the road, as well as capabilities, whether that's skills or general infrastructure to support the upgrading of manufacturing?
Yeah, certainly, Henry. I think to me, the bigger risk in terms of execution, I think the intention of the government is very clear, right? So for those who might not know, we did have a small change, actually not a small change. We had a change in terms of the governing of the government or the party in Vietnam last year when we had a new general secretary, right? And the party and the government now are very much business oriented, right? So they want to make sure that firstly efficiency is high. They want to have investment efficiency also high as well. So no longer those kind of projects where you just put the money there and 15 years you are not going to do anything. Everything has to done in an orderly, in a business-oriented fashion, right? Even for the state-owned enterprises. And initially, to be honest, like personally for me, I had some doubts as well, even though I'm Vietnamese, right? But when I look back at 2025 and look at all those projects that have been completed, all those blockages, all those bureaucracy that have been removed, and the example that I gave you earlier in terms of reduction of number of provinces and ministries downwards, right? I think the government intention is serious, and they are not just going to talk; they are actually walking their talk as well, right? So, but the risk of execution is still there because we have a lot to do. Vietnam is just a massive country in size, and for those who may not know, we actually have more than 100 million people, which I believe is in the top 15 of the world. So, in order to firstly to execute all those amazing projects or all those amazing growth, right, with at the same time balancing the economy, not compromising stability and inflation and employment. I think the risk is there, and we just have to watch them very closely. Now, I understand that some people are concerning about the risk of export, right? Given that we have a huge surplus with the US. US is our biggest trading partner in terms of exports. What I can answer or address is to say that we have 17 free trade agreements with partners around the world that we have not actually utilized yet. So I think there'll be certain shift towards utilizing more of the free trade agreements that we have with our partners around the world. And also in terms of skills, I think this is perhaps perceptions from the past. If you look back at the past, perhaps 5 to 10 years, I would agree that the skill of the workforce of Vietnam may not be on par with our peers in China or perhaps even around the regions. But over the past 5 to 10 years, a lot of efforts have been put on educations. We have a lot of students who study overseas or workers who work overseas, like me, coming back to Vietnam, right, and passing on the knowledge, helping the economy to build up the skills that are needed for us to deliver the work that are required from highly skilled industries, right? So you may not know, for example, obviously Samsung own the smartphones, own the high-end stuff from Samsung are from China, sorry, from Vietnam. And then I think Apple recently, they announced that they're going to have factory in Vietnam as well. And also in terms of the even the sophisticated products like robots, right? We have our own robots manufacturers in Vietnam as well. So I don't think skills are a problem. And I think it's just going to get better from here. Now, regulation, I'm just going to say very quickly, regulation, with this new government, it's just going to get a lot better. And we have seen that already. I think the fact that the government pushed really, really hard for the FTSE upgrade, right, really tells you something. They are serious about making sure that our foreign investor, our foreign business owners are getting comfortable with Vietnam as a market that they can go in, and they know that political stability is going to be there, business environment is going to be supportive, and the government is going to do whatever is needed in order to make sure that the economy is going to flourish in the future.
Great, thanks, Tung. I'd also like to add, as I mentioned when we were showing the IPOs, the V&G group, they have their own social media, local social media platform, messaging, payment, all of this, and they're competing with Meta and its other competitors from the US. Global internet companies are competing in the Vietnamese market, which is very different from China, which has a firewall and there's no competition there. And V&G Group is still able to innovate to provide a local product for local users. And it's currently a free market in internet services in Vietnam. And I think that's important for investors to know. The final question that we'll take today, though we have more, is about demographics, specifically the birth rate. We showed the median population as being about 30, 33. Tung, do you know actually what Vietnam's current birth rate is and how it compares to, say, China?
It's a good question. So I believe the measurement that they normally use is fertility rate, which is how many kids a woman is going to have, right? So for Vietnam, I believe that's going to be close to 2, maybe 1.9, and China is roughly 1. Now, in terms of per 1,000 people, right? I believe the number for Vietnam would be roughly double that of China. So I'm thinking of China perhaps close to 7, and Vietnam is about 13 or so. So Vietnam is definitely growing compared to China. And if I'm not wrong, if you look at the net birth rate, right, which is taking into people who are passing away, I believe for China now, if I'm not wrong, is actually negative. But for Vietnam, it's close to 1, maybe 0.7, 0.8. So we are definitely growing versus China. And interestingly, when I mentioned about the median, right? I obviously take the median as a measurement, but even if you break it down, I believe 40% or more than 40% of population is below 24. And compared to China, that is perhaps close to like 30%. And if you look at upper end, right? For 65 and above, definitely China is more than Vietnam by 5 to 6%. So if you look at the distribution, even the distribution of age of Vietnamese population, Vietnam has a much younger population, right? That reduces the burden on social securities and also allow us to adopt technology more quickly, because younger people typically they tend to move faster in terms of adopting new technology, right? And one of the other thing is that they tend to be more hungry for work and for successes. So they are willing to work harder to climb up the ladders in terms of the corporation, right? And that's really what we have been observing in Vietnam so far. When people who are interning for our fund, for example, they not only they can do a lot more advanced technological stuff, but they are also willing to do a lot more different work, right? And that's what we really want to see for growing economy.
Great. All right. Well, Tung, I want to thank you so much for joining us today. It's been a great discussion. I hope our audience enjoyed it as well. Given the number of questions we received, I think it was useful to a few people. And Tung, I hope you get some rest. I know it's late over there. And hope to see you soon.
Thank you so much, Henry.
And I
Really
wanted
appreciate it.
and I wanted to just quickly say that we will be hosting our China Q4 review webinar. For those of you who are interested, please register at KraneShares.com under webinars. We'll be hosting that on January 21st. And I hope those who are interested will be able to join us. Tung, thank you so much once again.
Thank you, Henry.
All
Thank
right,
you, everyone,
take
for
care.
joining.